And I'm actually going to visualize it for you. I built an interactive equity curve simulator using Claude with fee analysis. And basically what this is it's trying to show you what your bankroll could look like after n number of trades, or after you've taken a certain number of trades. So if I slide this, it's going to simulate a new equity curve. The red line is what my profit could look like, or what my bankroll could look like before fees, and the blue line is how my profit or how my bankroll could look like after fees. So if I've only taken a small number of trades, let's say 10, and let's say I have a starting balance of 1,000, I've taken 10 trades, 55% win rate, average win is 1%, average loss is minus 1%. And let's say the limit order for my entering, so me trying to enter trades, I'm using a limit order. And when I'm exiting, I'm also using a limit order to exit. This is the simulation over 10 trades. If we were to compare the two, the difference in profit is not really that much. So after trade number 10, I would actually be, well, before fees, I would be break even. After fees, I would be down $4. So that's not like, like at first glance, it's like, oh, it's not that big of a deal, right? It's only 0.02%, right? Not that big of a deal. Okay, sure. If we take a little bit more, let's say I've taken 40 trades. Let's say I've taken 40 trades in a month, right? I compare the two, before fees, after fees. Okay, 1148 before fees, 1130 after fees. So total profit before fees, 148. Total profit after fees, 130. I've paid 18 in fees. So how much of my profit did I lose just purely to fees? 12%, right? It's not the end of the world. But if I really crank this number up, by the way, every single time I make a small little change to any of these, it will re-simulate like a new simulation from scratch. That's why some of these equity curves are going to look a little bit different, right? But look here, after I've taken a very large number of trades, so 300, 40% of my fees, 40% of my profit vanishes to fees, because look at this, total profit before fees, 384, total profit after fees, 228, right? So I paid $156 in fees. So 40% of this whole batch is lost to fees. So you can see it's starting to make a little bit of a difference. Now let's pretend that I'm entering a trade with the market order. Now this percentage is a lot bigger, 76.9. That's a big deal. So before fees, I would be up, and let's say I've taken 300 trades in a year. So I'm thinking in terms of like in 12-month windows. So at the end of the year, this strategy would be up 38% before fees, but after fees, it's only up 9%, literally less than 9%. So you can see it's quite a big deal. Now, if I was exiting with market orders as well, this is where it gets crazy. This strategy literally before fees would be profitable. It would be up 38%, but after fees, it's down. It's down 3%. So these are two completely different equity curves, right? So fees are a really big deal when you think in terms of large numbers, because when we are trading intraday, we're going to be taking a lot of trades. Most people who trade on the 1 minute time frame, they take somewhere between 10 to 30 trades per month. So at the end of the year, it's going to look something like 300-ish, maybe 400-ish trades, somewhere in that range, right? So these fees, they make quite a big difference. Now, if I was to increase the size of the average win and also increase the size of the average loss, so what is the percent move that I'm trying to catch, like in a specific coin, right? The bigger the move that I'm going for, and also like the wider of a stop loss I have, the impact of the fees is going to lessen. It's not going to be as bad. So we can have here, let's say my average win is 5%, my average loss is 5%. So you can see here my actual risk to reward is still 1, but the impact to fees, it's dramatically lower, right? 41% is lost to fees. If I was to really crank this up to 10, 35% is lost to fees with market in and market out. And if I was to crank this all the way down, look at this. It just literally, like this strategy would literally burn money, right? would literally be down only and burning money. So the fee structure does have an impact on your P&L, and you need to know your numbers. You need to be aware of how much of an impact this actually has on your trading, because once you know your numbers, you can set limitations for what you're willing to go for. So this is actually the reason why the smallest move that I'm willing to capture if I'm trying to enter a trade with a limit order, it's actually 1%. I will not ever go lower than this, because look, if we're entering with a limit order and we're exiting with the market, and we take 300 trades with a 55% win rate, you can see here, yes, the strategy still makes money, but there's quite a gap here. Well, it's still a pretty big gap with how much profit is actually being lost to fees. And this is assuming that every single trade has a risk reward of 1, and I'm not cutting any trades early, right? Assuming. Now, when I'm using market orders to enter a trade, the smallest move that I will be going for is actually 2%. Oh, sorry, 2.5. My bad. It's going to be 2.5. So we can see here that still, after fees, the strategy still makes money, but the gap between before and after fees, it's quite heavy, right? It's still quite heavy. So yeah, this should hopefully really shine a light that these numbers might seem small, but over time, they do really add up. They do seriously add up. So you need to know your numbers, and you need to have limits or you need to have some kind of rules for when it makes sense to enter with a limit and when it makes sense to enter with a market, right? And then for exiting, this is how I approach exiting trades. If I'm trying to take profit on a winning trade, I'm always going to be doing it with a limit order. And if I need to take a loss on a trade, I'm always going to be doing it with a market order. So the reason why is because when I'm winning a trade, I don't have urgency, right? If I'm already on side and my trade is going well, I'm okay to patiently wait for it to hit the target, right? But if my trade idea is wrong, I need to get out of that position immediately, because I don't want to hold risk in that position anymore, because the trade idea is no longer valid. Why am I holding risk in it? So at all times, I'm going to be taking losses with the market order. So yeah, this should really help. Well, I hope this helps to really emphasize fees are a big deal and you need to know your numbers. And by the way, if you're serious about improving as a trader, I'd like to invite you into my free Telegram. Here's what you're going to get inside. You're going to get a 100-page guide on how I trade breakouts. You're also going to get a 214-page guide on how I trade reversals. And by the way, these two guides, I go really, really in depth with the strategies, with the theory, with the logic, and also I include total combined within these two guides, there's more than 75 trade screenshots for you to study, through just continuous repetition, and it's going to help you train that pattern recognition of seeing the exact same thing happen over and over again. Also, you're going to get a custom trading journal that I built, which makes it really easy for you to track your trades, but also to review your trades. Literally in the journal, there's a tab called Educational Resources, and in there I have a template for reviewing trade screenshots and guide to show you the process for how to actually review your trade screenshots to improve your performance over time. And also a whole bunch of other stuff as well that I give out for free in my Telegram. So if that sounds interesting, click the link in the description to join.